This is the Daily Market Rundown live from the Tradelo Trading floor. It's January the 17th. Some highlights from today's show. Pound to bounce in the near term. Is BOJ the next target for bond vigilantes? And Nasdaq Structure is coming into play. Good day, traders, and welcome to the penultimate, or the final trading day, of the week. It's Friday. Happy Friday. Let's start off and talk a little bit about some of the overnight moves. There's not a great deal going on, a little bit of flattening in some of the bond markets. Of course, since sort of that CPI print, we have seen particularly the back end of the bond market stage some sort of a relief rally. Not really so much as a change in trend. I think the trend is still very much intact for higher yields at some point. But of course, we have had quite an excessive move in the bond markets over the course of the last 6 weeks. So very much seeing a continued theme of this just slow, steady bounce, grind higher in some of the back-end bonds. And the result of that is it is really creating quite a positive sentiment in which equities are trading higher. So we can see DAX, of course, is now continuing that breakout into record high territory. Why? Well, look, we have a central bank that's hell-bent on cutting interest rates, and of course we do have a little bit of reprieve from the higher yields we've seen in the back end of the market. So that theme set to continue. I think it's definitely one to keep a close eye on. Should we see yields continue to pay back next week, don't be surprised to continue to see that DAX move into record high territory. Now, let's go across and look at some of the key market news. There's an interesting article in the Reuters, and it's all about the UK, the United Kingdom. And I think the key takeaway from it is, obviously at the start of this year, we saw a little bit of an attack on the gilts. I think that was the early theme for this year. It was this idea of, the UK ultimately is not necessarily being fiscally irresponsible, but they are sort of ramping up spending at a time when the economy is stagnant, it's not growing. And effectively the bond market said, well, look, enough is enough. If that's the case, you're going to have to, pay a higher rates to get that debt out there. Now, I think what this article is leaning on, this is why I think it's so important, is telling us that ultimately, with this sort of move higher in yields across the board, okay, it's not just the UK, we can see it in Europe, we can see it in the US, should that trend prolong itself, should we see that be a key theme for this year, which is higher for longer, in longer dated yields, the economies that are very heavily reliant on that debt are going to struggle the most. Okay, and that's what this article is leaning on. It's this idea that, the UK economy that's very dependent on debt, it's obviously got twin fiscal deficits, as a result is going to underperform everything else. Okay, the lean on that is as a result, if you look at the option space in terms of the pound, the pound against the dollar and some of the other crosses, there's quite a lot of sort of implied vol for the pound this year. In other words, it's a market that's going to move a lot. Now, again, maybe none of you have traded the pound much, but if you go back sort of, I want to say 2022, 2021, there wasn't a great deal of movement in the pound. Now, as a result, of course, of this higher yield environment, the pound could actually become a very good tradable market. Okay, that's the point of this article. You've got to be looking to trade markets where there's going to be movement. Now, with that in mind, I think the pound's a great chart to look at. Of course, I put out a tweet yesterday and put this out in the Discord channel that it looks as though there's a near-term bounce coming in. Why? Well, look, the pound or the gilts is ultimately what drove this last leg lower in the pound. We've seen that yield pair off now. It's come off almost a good 20-odd basis points. So as a result, we should see this steadily grind its way back up. Now, again, the trend line is indicative. It's not something where I'm just going to go and put an offer there, but it's very much points to an idea that we should continue to see this theme of lower highs, lower lows, lower highs, lower lows. Okay, I think the key takeaway here is, when that pound approaches this 124 area, 123.75, somewhere there, keep an eye on those yields. Okay, should we start to see those yields just grind up a little bit higher, don't be surprised to see that pound rotate back lower again. Okay, key market to pay attention to. I think there's very much a trend in that market. The positioning is very much for a lower pound, particularly if these yields remain elevated. What do we mean by elevated yields? Well, look, so long as gilts remain above 4.5% and they sit inside this 4.5 to 490 range, okay, you are going to see that pound remain offered and you are going to see speculators wanting to short that market. Okay, so let's move on then to the Dixie. I posted this chart yesterday, just a little bit of a recap. I've been talking about this idea of we are going to get a little bit of reprieve. I suspect after Bostic's comments yesterday, what was it, Harker? Bostic, Harker, one of the two, where they came out and they effectively said to us, look, they thought the inflation number was very positive, and they still think there's 3 to 4 cuts this year. I think that created a little bit of a short-term sort of, not setback necessarily in the dollar, but perhaps there are going to be a few bigger players that look at this and say, well, perhaps a time to take a little bit of profit. So don't be surprised to see the euro, the pound, the Swiss, a couple of these currencies bounce against the dollar. But again, when I say bounce, not a change in trend. Okay, we are not suddenly trying to short the dollar. What we're trying to do is just be aware that the dollar has staged quite an aggressive move over the last couple of weeks. We should see a little bit more two-way trade, but at some point this is going to punch up higher. So keep an eye on that. And then if we move across, a very important theme that I suspect starts to develop next week is all about the BOJ. Look, the markets have been very patient with the Japanese yen and the Bank of Japan in general, simply because the BOJ has kept everyone guessing. They've sort of said, well, look, we remain hawkish. We think we will hike a little bit more, but we're not going to tell you when we're going to hike. Now, I think, and I suspect what comes next week is the BOJ is going to get tested. Right now, if we look at the Japanese yen, if you cast your minds back, there was intervention last year a number of times from the BOJ. We know it was very expensive for the BOJ, and we can see we're right back at those intervention levels again. Okay, what that spells to us is that the BOJ's got very limited choice here. In terms of options, they can choose to intervene and obviously prop up their currency, which is stupidly expensive, or ultimately they can hike. Now, the expectation is they are going to hike next week. Okay, I suspect they don't have a choice. If they don't hike, that Japanese yen is going to make new yearly lows, and then they'll be forced to either panic, prop up their currency, or come out and sort of signal that they are going to get a hike at the next meeting. Okay, the point is that the BOJ is now in a sort of, they've backed themselves into a bit of a corner where speculators are saying, look, either you get on with it, you hike a little bit quicker, ultimately, otherwise we're going to keep your currency very, very weak. Okay, so keep an eye on that BOJ. I think what happens next week, I think they hike, and I suspect, and this is the play I'm looking for, I suspect a hike ultimately brings sellers into play. In other words, typically a hike should see the yen sort of stage some sort of a bid, but I wouldn't be surprised to see a hike in this instance where everyone sells the yen to say, look, you're going to have to be a little bit more aggressive in these hikes. We've got a Fed now that's perhaps stopped, paused, may not actually cut rates again, and so but from a rate differential standpoint, the BOJ either needs to play aggressive catch up. Otherwise, I suspect what we might start to see is a couple of disgruntled investors coming in and trying to stage some sort of an aggressive sell-off in the Japanese yen. Okay, now keep in mind that we'll have ripples. The reason I'm saying this is that when there's ripples in Japanese yen, don't forget there's big institutional players in that currency market, in that bond market. So should we see that Japanese yen take out that yearly lows, don't be surprised to see that ripple through into a couple of the other markets in some form of a risk-off type scenario. Okay, and then our play for the day, our sort of structural play, our market that's in play, it's very much the Nasdaq. Okay, I think there's quite a nice sort of theme developing in this Nasdaq, and what we can see is, we have been in this sort of, since late December, we sort of made record highs, we then sold off very aggressively, then went staged a bid, made a lower high, sold off, extended the lows, and made a lower high, lower low, and you can see this real funneling process occurring. Now, keep in mind, this week as the theme has been yields have paired back, and suddenly, equity buyers are straight back into buying mode. Now, what this points to is, should we see yields continue next week to pair back off, perhaps if this is quite a major turning point for yields in the markets, what we should see over the course of next week and perhaps into month end is at some point this Nasdaq's going to stage that breakout. Okay, now again, lines are indicative. They're not there to tell us that we buy it then we make lots of money. What they're there to tell us is that this market is making a series of lower highs. We can see no one wants to be aggressively buying yet. So should we start to see a lot of absorption, this is where the footprint comes handy, should we start to see a lot of two-way trade there, a lot of sort of acceptance of these higher prices, at some point point, we are going to see any last sellers get pushed out of the market, and we are going to, of course, see those buyers then step in more aggressively and take us back up to record highs. Okay, so keep an eye on that. I'm not indicating this as bullish. I'm indicating we've now again turned over yesterday. You can see we failed at that 21,500. I suspect today, given its OPEX, we should sit in here and perhaps trade quite a bit of two-way trade and not really do anything. Keep in mind we do have a US bank holiday, of course, on Monday. So it feels like this is something for next week, but a very, very interesting chart. Keep it up in focus. All right, that's then a wrap for today. If there are any other questions, do make sure that you post them into the chat box in the Discord channels. Otherwise, as always, it's a Friday. There's no real economic data out today. Everything is kind of going to go quiet quite quickly. Why? Well, we've got a long weekend in the US, so I suspect we do a great deal of nothing today. What that means is you've got to take your chances. Okay, take those little easy plays. Don't be looking for too much. A couple of scalps here and there. Bank it. Come back next week, and we start all over again. Okay, good luck out there, and I will catch up with you all again next week.